I don't believe it's being suppressed. That's not my belief. Is it possible? Sure, of course it is. But I do believe that institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, that becomes a support level. But we're not there yet, at least not today. So.
Hey everyone, we're in New York City at my favorite podcast studio, and here with me is James Lavish. For those of you tuning in who just watched him on What Bitcoin Did, thank you for being a diehard James Lavish fan. What's up, James?
You have to be to watch this thing.
So. By the way, what do you think of the criticism from some in the community that are like, it's the same guests on every podcast over and over?
You know, actually, when I started watching podcasts in Bitcoin in particular, I liked seeing people over and over again and hearing their message, even if it was the bulk of it was the same message.
Yeah.
It started to sink in a little bit better. So it took like 2, 3, 4, 5 times to really get it. So, I mean, you know what it's like. I would search for Michael Saylor and see how many podcasts I could listen to in one day, you know, or Preston Pish, or, you know, all of the big names in the space that they would have a message that every single time they gave it was just maybe a little bit different or in different context. And then it would give me a little bit more understanding, just a better dimension around it and solidify that understanding. So I actually didn't mind it. It was good for me.
I agree. Every conversation is a touch point. And I think that maybe someone's binging this. Maybe they're on a James Lavish kick. All right. So I will try to make this a little bit more evergreen because I think that you're someone who does such a good job breaking things down. That's what you do in the Informationist newsletter. You break down complicated financial system topics into something that everyone can understand. So let's kind of zoom out for a little bit and just talk about Bitcoin and the TradFi value proposition, because most people are familiar with the sort of 60-40 portfolio. Some people have done really well on that over the last few decades, and the traditional allocation to equities and the S&P index and a little bit of bonds. It's performed well for a lot of people, but things are changing. And now Bitcoin is seen as a legitimate global macro asset. You have to get off zero and have at least a little bit. Can you speak to that and how people should evaluate their portfolios to add Bitcoin?
Yeah, so it's a great question. And I get asked this a lot from just the traditional world is how does this really fit into our space? And especially being with the Bitcoin Opportunity Fund, with having family offices that are interested now, and they want to know how does it affect my portfolio? What's the right allocation for me? How should I be approaching this? And is Bitcoin really different from everything else? And so the first answer is, you know, the only wrong answer is zero. The 0% allocation is the wrong answer. And it really depends on what your portfolio is. And what you just said, that 60-40 portfolio is kind of that classic 60% stocks, 40% bonds. Over the history of investing in my lifetime, that has been a great portfolio until the last number of years when we had that big drawdown in bonds. And so we went from zero interest rate policy to over 5% Fed funds rate, and it destroyed a lot of people's bond portfolios, and hence impacted their overall portfolios because they were not set up in a way that could weather that storm. So what I tell people is, well, first of all, we got to back all the way up. And Bitcoin right now, if you look at the whole investment universe, and you've seen this chart from Jesse Myers and Croesus, and he and I ran these numbers, and we came pretty close to almost the exact same investable universe. Michael Saylor's been using this in his presentations, the $900 trillion of investable assets. Well, Bitcoin's only $2 trillion of that right now ish. And so if you look at that as Bitcoin is, like you said, becoming a separate investable asset class, and just like gold. So people think of gold, they don't think of gold as, gold would be part of my stock or overall risk portfolio allocation. Gold is a separate asset. It's just like that, the digital store of value, ultimate digital store of value. And people are waking up to that.
Even Powell has said it.
That's right. So, and we've got some people in our administration now who are pro crypto and are actually Bitcoiners, and they understand that it's a store of value. And so just looking at that, and as Bitcoin grows and gathers more assets, that market value of Bitcoin grows, that volatility will dampen, and the institutions will get more and more comfortable coming into the space. We've talked ad nauseum about how important the ETFs have been, how in one fell swoop they took care of all those operational legal challenges that would be difficult for institutions to come in and buy Bitcoin themselves. Now they can.
Coin Stories is brought to you by Genius Group, a Bitcoin treasury company listed on NYSE American, ticker GNS. Genius is on its way to hodling 1,000 Bitcoin in its treasury while educating the world on a Bitcoin-first future. Genius is also launching the Bitcoin Academy with courses from the likes of Saifedean Ammous, author of the Bitcoin Standard. Join the launch waitlist via the QR code on the screen or the link in my show notes and receive the weekly Bitcoin Treasury newsletter, plus a chance to win a whale pass to Bitcoin 2025 in Vegas this May. Genius Group. Genius isn't measured in IQ, it's measured in Bitcoin. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. As a publicly traded leader, Bitdeer boasts a massive 2.5 gigawatts of electrical capacity and infrastructure across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Learn more at bitdeer.com.
And I'm seeing institutions come into the space and start buying, and it's interesting because you hear of the big players, and some of the big banks who are buying MicroStrategy, and some of the big banks who are buying some IBIT and whatever, and some sovereigns. But just talking about institutions and ones that you would never even heard of, like for instance, I was talking about this the other day, that when you look at the ETFs and the holdings of ETFs, sometimes you have massive players in there that people would not even recognize. And so one of those players is HBK, and this is a Dallas investment firm. It's a Dallas huge hedge fund. Managing partner Jamil Akhtar is kind of one of my colleagues from back in the day when I was in Dallas Fort Worth, in hedge funds there when I was at Carlson Capital. Well, Jamil is one of the big. He's a managing director there, so a managing partner there, and so. But this is a hedge fund that's got over $20 billion of assets, and they're one of the largest holders of the ETFs. Hundreds of millions of dollars of these.
What percentage of their
portfolio? Well, I don't know what the percentage of their portfolio is because it's not public what their total assets are, and I haven't talked to them in a long time. But this is just one example of somebody that nobody would have heard of, but these are very smart people. Like Jamil is one of the smartest investors I know in the entire world, and he is allocating to it. That's a really big deal. Now, I don't want to. Don't mean to call him out particularly, but that's just an example of one person that I know is extremely intelligent and is now in this space. And so that's important. How are they investing around it? I don't know. The options are likely a very big deal to them because they can manage risk around it. And now you've got that ability to do that. So the point is, though, is that now we're starting to see players come into the space that may not have come in before because of those operational issues. Even hedge funds, but forget about pension funds and endowments. They couldn't come in before the ETFs. Now they can. So, but as Bitcoin does solidify itself as an asset in that total investable universe, and that volatility does dampen a little bit. I believe it's going to continue to be volatile for weeks and weeks, or months and months, and maybe some years here, likely years here. But once it does that, then it starts to draw from the rest of that investable universe, not just from stocks and risk assets, but now it's going to draw from bonds and from real estate, because it's an easier asset to get a hold of for real estate than, you don't have to have management and oversight and maintenance fees and all those costs involved. Super simple. It's just a store of value rather than have an illiquid store of value of real estate. You have a very liquid store of value in Bitcoin. I believe that will be one of the buckets it starts to draw from. And then obviously bonds, with everything we're seeing that's going on the sovereign level, and how all of that debt and all that risk in the great financial crisis was kicked up to the sovereign level. Now we have a problem there, and we have necessary debasement of our currencies, of our fiat currencies that you talk about all the time, that bond investors are waking up to. and they're realizing they need a better return on their longer dated bonds in order to get a real return against actual inflation, not the CPI inflation, but real inflation.
Right.
And so that's a kind of a big picture overview of where we're at and where Bitcoin kind of fits in, but it will eventually start to draw from those other asset classes, I believe.
Well, now that we have the ETFs and other vehicles like options where the market can express their views one way or another on Bitcoin, does that create an opportunity for any price suppression?
I would say, well, look, we don't know exactly what's going on with the custodians of Bitcoin. We don't know if they're fractionalizing it at all. We don't truly know until Coinbase releases exactly what all the addresses are and exactly how they're holding them and verifies that. Like we have audits. Yeah, I don't know. Do I expect it? No. Do I believe that there's manipulation going on? No, I don't believe that. I just think I just think that truly, I think, look, $100,000 has been a massive mental level for people. You know, it jumped over it, came back, jumped over it, came back, jumped over. It's done it like 4 or 5 times. And I believe that there are some the OGs, people have been holding on to this thing for a very, very, very long time, and they've made life-changing wealth, and they're going to enjoy it now, and they're cashing in a little bit. And you know, that's okay. They have way more than you and I do, and they're just cashing in, and that's okay, you know. But I don't believe it's being suppressed. That's not my belief. Is it possible? Sure, of course it is. You know, but I do believe that institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, that becomes a support level. But we're not there yet, at least not today. So.
When you're evaluating a portfolio's performance, can you break down simply what a Sharpe ratio is?
Yeah. So basically, in basic terms, the Sharpe ratio is just it's a measurement of the return of the return of your portfolio, and it includes the volatility in that return. So if you have a massive return, but you have massive volatility, it may hurt your Sharpe ratio, right? So, but if you have great returns and you just have slightly higher volatility, then your Sharpe ratio goes up. And
so you want a higher Sharpe ratio.
You want your Sharpe ratio over 1.0. That's what you really want. And so when you look at portfolios, you look at institutional portfolios, professional portfolios, you're looking at that Sharpe ratio to see how is this performing on a risk-adjusted basis. And so what I mean by that is that it's very volatile, then it's riskier, right? As a portfolio. But if you have volatility, but it's that volatility is adding massive returns, then that's okay, which is a kind of a tee up to your initial question about the 60-40 portfolio. And so you can look at this. You can go on to Nakamoto portfolio.com, and you can create portfolios and look at what the impact is to your portfolio if you added Bitcoin to it. And so what institutions are starting to wake up to slowly, but they're starting to, and we're explaining it to them, we're teaching them this, is that if you look back over the period of the last 10 years, and you just look at the classic 60-40 portfolio, and you added any allocation to Bitcoin to it, it enhanced your returns dramatically. It only raised your volatility a little bit. And so it raised your Sharpe ratio. It made your portfolio a better risk-adjusted return than without Bitcoin. And that blows investors' minds. They can't believe it. They think that's just not possible. But it's because that it is volatile, but it's a volatility in a rising asset over time. And so if you hold on to that for a few years, it will enhance your portfolio undoubtedly, at least if you look back over the last decade. So if you pull up, like we can pull up the a 60-40 portfolio, and you can see how those Sharpe ratios they're affected. So I analyze this for one of my newsletters, and if you look back the last 10 years, through December, through 2024, and you had a 60-40 portfolio, your return over those 10 years would have been 8.5% annualized, okay, over that period. If you added just 1% of Bitcoin, just one, then your return would have gone up to 9.7% annually. So that's another 1.2% annually. So your entire return goes from 132% over those 10 years to 159%. Okay. But here's the crazy thing. Your volatility is very similar. It's still 0.57% annual daily, and annualized, it went from 10.86% annualized volatility to 10.9%. That's it. Just 4 basis points higher, which took your Sharpe ratio from 0.63 to 0.73. Okay. So we know that the bonds were volatile. So your Sharpe ratio was not that great over the course of that period of 2021 to 2023. So we know that, and but if you added Bitcoin, it enhanced it. If you added 5% of Bitcoin to your portfolio, your total return went from 132% to 290%.
Wow. This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed specifically for small businesses with team signing capabilities and a web dashboard. Regardless of the size of your business, start your Bitcoin treasury the secure way. Take control and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. Next up, Speed, the fastest growing Lightning wallet in the world and my preferred way to send and receive sats. You can use Speed to buy Bitcoin, swap with stablecoins like Tether, and snag gift cards to earn rewards, all in seconds. Download Speed via the QR code or the link in my show notes. Use code COINSTORIES10 for 5,000 free sats. Are you ready to take control of your wealth, your Bitcoin, and your online privacy? The Bitcoin way is here to empower you. Learn to take full self-custody and eliminate all counterparty risk. Learn how to set up and run your own node, and upgrade your cybersecurity and build a fortress of privacy around your online activities and your Bitcoin. The Bitcoin Way specializes in personalized one-on-one training. Schedule your free consultation at thebitcoinway.com/Natalie. And finally, Coinkite, the one-stop shop for all your Bitcoin self-custody needs. Their flagship cold card wallet is the go-to for cold storage. Protect your Bitcoin like a pro. Visit their site and grab 5% off with promo code COINSTORIES. All right, back to the show.
Okay. And your annualized return went from 8.5% to 14.2%. Like,
wow.
Insane,
What
right?
a sweetener.
What a sweetener. Your volatility only went up to 11.7%. So it's less than 1% volatility rise, which took your Sharpe ratio up to 1.06. So now you're above, now you're a better Sharpe ratio. So now you're over that 1.0 kind of threshold for your Sharpe ratio. And then if you added 10% of Bitcoin to your portfolio, your total return would have gone from 132% to 520%. And your annualized return went to 19.5%. Your volatility only went up to 13.75% from 10.86. Yeah, it's more volatile, definitely. It's 3% more volatility annually. But your Sharpe ratio went to 1.29. Yeah. So it still went up.
Yeah. So that's why people say the volatility is a feature, not
a bug. That's right.
But when you're talking about the 60% portfolio, if that's equities, are you measuring just the S&P 500?
Yeah, the S&P.
Okay. That's the benchmark.
Your benchmark is the S&P 500.
So this is actually something that I've wondered because when I was writing my book, I was looking at monetary inflation and how to calculate that and annualize the money supply is growing about 6 to 7%. I think I came out to like 6.8%.
Yeah, it's somewhere between 6.8 and 7.2, depending on how you measure it.
Yeah. So but when I watch like Michael Saylor's talks and when he puts up those charts, he actually puts monetary inflation at the S&P 500 index. Why is that? Because that increases it all the way to like 10 to 13%. And that's sort of the hurdle rate that you have to beat.
Yeah, I think what he's saying is that captures that expansion of the money supply. The S&P efficiently captures it, and the other measures may not efficiently capture it. It would make sense that, well, that would capture because that's your economy. in a market.
Oh,
And so that would make perfect sense. So it's, you can use all kinds of different measures. And we talked, Michael Howell and I talked about it. He's a master at global liquidity. He has different measures that he uses. He includes volatility in the bond markets as part of the measure because it affects the collateral that you need in order to grow the debt. And so there's a lot of different ways you can look at it. But the bottom line is CPI is flawed.
yeah.
It's not accurate, and you have to look at the expansion of the money supply, definitely. And I believe it's somewhere around 7%, and that's a pretty solid number as far as just a pure expansion of the money supply.
It's crazy.
Yeah,
It's crazy when you actually realize that. So it's like if you're not getting a 7% raise, you're basically losing money.
correct. Your wages are lagging, and you're being stolen from by the central banks.
It's wild. I actually heard a statistic, and I don't know if it's accurate, but I think it was from Preston, that you could have held 98% cash and just 2% Bitcoin, and you would have beat the S&P 500. Have you heard something like that?
I've not, but we could run the numbers at some point.
I mean, I might have to, and
Yeah.
if that's accurate, I'll put the chart up. But it's crazy how a little bit goes a long way. So, but I mean, look, TradFi, I'm assuming, is running the numbers every single day. They can see what you're talking about. So why isn't everyone allocating 5, 10% or more to Bitcoin?
They're not running the numbers. That's the crazy thing is that, look, I come from that world, and it's very difficult to change your mindset away from something that has worked so well for you for so long. And so part of the issue is just the messaging around Bitcoin. We have a lot of people who talk about Bitcoin saving the world and how Bitcoin fixes this is the saying, right? And it does fix a lot of things. But when you talk about that, all the traditional institutional investors here this is disruptive. Is it really disruptive? Can I believe that's really disruptive? Is it going to really disrupt the payment systems? Is it going to really disrupt gold as the ultimate store of value? And that's where you get into that question that you and I had chatted about very briefly a couple of days ago, which is, well, Bitcoin doesn't have any cash flows. Like, how do you value it? There's nothing there. And that's why Buffett called it rat poison squared, because it doesn't have any inherent value. And there's nothing you can hang it on. And gold had suffered this for a long time, that it doesn't create, there's no dividends. There's no cash flow from it. You're not creating anything from it. You're just storing things into it and hoping that somebody will buy it from you at a better price later. And that's all you're hoping for. But if you think about it, gold is gold's a base metal. So, it can't be destroyed basically. So, it's going to be there. The question is, how much money is going to be chasing after that? And that's what gold investors that's what they anchor themselves to, is the expansion of the money supply means that there's going to be more dollars chasing after that. So of course it's going to be,
Mm-hmm.
And so, but what's the great utility? I mean, there's definitely some utility for gold, but the big utility for it is jewelry. I mean, you have some on you, so that's the base utility for it. And people can't get their heads around, well, what's the utility of Bitcoin?
Mm-hmm.
And so when we see things like what's going on in the Doge Commission and how dollars just seem to disappear out of the government and into the hands of wherever,
It's crazy.
and there's untraceable. Well, we think, well, if they had it in Bitcoin, you'd see where every single transaction was. You could see it all, and it would be verifiable easily. And you don't have to verify who the other counterparty is. And so now we're seeing that with gold today, with the run on the London exchange, and how the Bank of England is struggling to get the gold that people have deposited in their vault. Well, they fractionalize it out, they've lent it out, and now they're struggling to go get it. Well, you don't have to worry about that counterparty with Bitcoin.
Right.
This is a really difficult concept for institutions to get around. I mean, we store we have a custodian that holds all of our assets. We don't have to worry about it. They hold all of our certificates, all of our stocks and bonds. It's all digital, but they manage all of that. The banks hold our cash, as hedge funds, they manage all of that. And so it's hard to get your head around of, wait a minute, I'm going to like self-sovereignty of my own money.
Mm-hmm.
How does that work?
Yeah.
Then can I trust it's really there, even if I have these keys or these
Right.
words? And so it is a big hurdle to get over and get past as an institutional investor because of just those things. It's difficult to conceptualize that there's something here that is truly trustless, that is truly decentralized, that I don't have to worry about that it's going to be stolen or it's going to be lost, or that it's there as long as I've got my, my keys to that portion of the time chain, then I know it's there. So it's immutable. But we are seeing some of the smartest players in the space get over that. To answer your question though, by and large, they're still not there. It's taking time. It's taking a long time to get around that conversation up to the top of the list to become an allocation. At this point, it's still only been a risk asset. It's something to go out on the risk curve. It's something that's different that could enhance your portfolio. They have seen some of these things, but they believe that it's because it's a risk asset and they're taking risk by adding it to the portfolio rather than understanding that they're actually adjusting their overall risk adjusted return down over a long period of time. And it takes a minute to get there, and they're not there yet.
This is sort of why I asked you that price suppression question, because I wonder how many people actually get it and if there could be some sort of manipulation, because I mean, our country is so far in debt, and there have to be people in leadership roles that understand that this ship is going to sink. And so we need some sort of peaceful alternative, but we can't just start buying Bitcoin. I disagree with the Bitcoiners that think that the Bitcoin Act is imminent, where we're just going to be purchasing 1 million Bitcoin and flooding the market with demand. I wish, but I just don't see it happening right now. And I don't even know what that would do to this $2 trillion asset class. But do you think there could be some, I don't know, I guess, greater plan that's in motion, and now when the price is suppressed, they can come scoop it up at a lower valuation or something?
I mean, I don't put anything past the government, but no, I don't think that's happening. I can't say it's definitely not. I don't know, but I actually think that I was up there last year with the and trying to help educate some of the senator and congressman staff about what. There's a lot of just ignorance. There's a lot of disinformation. There's a lot of confusion. They don't know the difference between Bitcoin and all the other things. Oh yeah, we know about Bitcoin. We've been looking at the Ethereum one. It's like they just don't get it. And it's not that they're dumb. There's a lot of misinformation out there. And then you've got but the point is, I think that a lot fewer people in DC understand it. And I think the vast majority of them are not worried about it at all. And I don't think they care about it. They just think it's some speculative asset for, a small portion of the constituent that is very vocal about it, but it's not that big of a deal. It's this little $2 trillion asset. It's smaller than Apple, So, but by and large, I think that they will come around to it eventually, and they're having the conversation, and that's probably the most important part. So if you want to talk about, this administration, how positive it is, it's that we're now having the conversations.
Sure.
Do I think that we're going to have a Bitcoin strategic reserve this year? No, I think it has to run through a gauntlet of legislation and committees, and it's just going to take forever.
Yeah.
So nothing happens quickly in DC, or at least not in Congress. Maybe it does in the executive office now, but not in Congress. So yeah, I think that it's going to take time. I don't think we're just going to rush out there and start buying it. Could we have some sort of NGO that's doing it? Well, we've seen that that's possible. We could.
Yeah.
I just don't think this administration is going to do that, especially after cracking down on all of them. They're not going to go and put a black mark on their record by doing that. That just doesn't make any sense to me.
Well, Bitcoiners had such high hopes that there was going to be some big Bitcoin announcement on day one, and it really didn't come. And then we had the meme coin launches and, tweets about other cryptocurrencies. But it's been interesting to see the stablecoin regulation and the sort of the fact that they really want that passed because it provides such demand for U.S. Treasuries,
Very
right? I mean,
important. Yeah.
how do you see that all playing out?
Yeah, I mean, they're realizing very quickly, and even last year when we were in DC, we were talking about that. That's one thing that they really did realize, that it's important. Tether is a huge buyer of U.S. Treasuries. So it used to be back in the day, before I was even involved in this space, how I understand it, it used to be that people bought Bitcoin, and then Bitcoin was kind of like the stable coin, that they would go from there to buy the other coins, and they would move out of Bitcoin into other things. But then came along the stable coins, and now they're buying stable coins, and that's kind of their holding place in order to get other currencies, cryptocurrencies, or Bitcoin. Um, or, it's important for people who want dollars, who don't have access to dollars, they can buy stablecoin instead, and internationally. So that's been a really big deal. And they're seeing this. US, the US government and DC, and the Treasury are realizing that this is a very big deal, and this is going to provide liquidity. We have got to get legislation around this, and we've got to embrace it. And I think that's what's happening. And that really is actually naturally the first step. So do I think that Bitcoin is going to disrupt the treasuries or disrupt the dollar? No, not today. And I think it just could enhance it. And that's the whole point, is that if you do put Bitcoin on your balance sheet, it could enhance the backing of the treasuries over a long period of time, not in 2 years, but I'm talking about 5, 7, 10, 12 years. That'd be a great asset to have on the balance sheet.
Well, we've heard Treasury Secretary Scott Bessent echo Trump saying they're focused on the 10-year. They want to get that down. Do you think that will be possible, or do you see yields rising? I actually talked just before this with Larry Lepard about, are we going to go back to ZIRP? And we both don't think so, at least not in the near term. Yeah. I think rates are actually going to go higher.
Yeah, they very well could. And the thing is that you saw over the last number of months, when the Fed lowered rates by 1%, the 10-year rose by 1 full percent.
It's not buying it. The market's not buying it.
So you've got two things going on there. You've got the market that's some investors are concerned about long-term inflation, and just what you said, that they're concerned that they're not going to have a real rate of return. If they buy the 10-year at 3.5%, that's not going to give them a real return over the inflation that's already at 3.5%. That's what's being quoted. So, and then the other side of it is that they know that with all of the deficits we're running, we're just going to have to keep issuing more and more and more and more and more and more bonds, borrowing more money, and there's going to be a deluge of bonds that come to the market. And another thing is, Bessent said it himself, that we've got to move out on the yield curve. We've got to get away from issuing T-bills and start issuing longer term debt. But how do you do that when he's
not doing it?
Well, the debt's at 4.5% still. So there was a period there where Yellen could have done it before the Fed raised rates so quickly. I mean, she was the chair of the Fed before. She must have understood that that printing $5 trillion was going to be inflationary. They were going to have to raise rates. I don't understand why she didn't get out ahead of that and issue more longer dated bonds. They didn't. And that is the criticism that Bessent has been making. But now what? You can't get out there and start issuing, 10-year 4.5% treasuries. That would only make the deficit worse, because now you've got 4.5% yields that you've locked, or interest rates that you've locked in on this debt that it's going to be for 10 years.
Yep.
And so that only raises your interest cost. So he's kind of in a pickle. And now what we're seeing is the market is trying to decide, are we getting into a period of stagflation where the economy is stagnating, but you still have inflation because of all the assets and because of the high interest rates? Is that kind of what are we following that perfect graph of inflation from the 1970s into the 80s, where it's got that one hump, comes down, kind of stalls out and goes back up again? We're kind of following it perfectly. Is that where we're at? And so, they want to get the 10-year down, but just lowering rates from the Fed is not going to do it. Like, that's not the way.
Yeah, I saw in Luke Groman's recent newsletter, he quoted Scott Bessent talking about how there needs to be a reordering of sort of the global economic system. And this
Mhm.
is why I'm like, do they know that they have to transition to something else? Are they thinking maybe about Bitcoin? But I guess they'll never tell us until they do something.
Yeah.
Okay, as we start to wrap up, give me your 30-second to 60-second pitch of why Bitcoin over, let's start with real estate.
Well, I mean, they're different assets, right? So, if I was going to measure them up against each other and arguing for Bitcoin, well, real estate, it it it's problematic for a number of reasons. It's illiquid. It has a lot of maintenance and fees associated with it, often, and taxes associated with it, often. If you're doing like multifamily units, you've got to get tenants in there. You've got to deal with that oversight. You've got to deal with a management company or pay a management company or deal with that yourself. You do get cash flows. It has been a good store of value, especially in areas where uh, where there are only a certain number of units, like oceanfront property, for instance. There's only so many that are ever going to be there, and so that's good. But if you're trying to use it as a store of value, um, Bitcoin's so much easier because you just buy it and hold it. That's it. You don't have to deal with any of the stuff. Yeah, you don't get cash flows from it, but you don't have to deal with any of the headache of it. You just buy it, hold it, put it away. And so that's a very simple one.
What's the argument for Bitcoin over the S&P 500?
Well, I mean, S&P 500, if you buy the whole S&P 500, well, you're just buying 500 companies. And you're riding out that risk. You're locked into the risk on market. And so the economy has to be expanding. It has to be expanding in real terms in order to make a real return on that, not just with inflation. And so if you're going to be investing in companies in the S&P 500, well, then you've got operational risk, you've got execution risk, you've got all kinds of single name risks that could be that could bite you when you're an investor. And even if you have 10 names, if you have one name blow up, then that's a single name, risk. And you have to understand that. So my argument for Bitcoin on that is that over the long period of time, I believe that Bitcoin is going to separate. It's going to become uncorrelated to the S&P. It's not going to have that correlation to, especially with the tech sector that we've seen, where it's the tip of the wrist spear. I think it's going to decouple from that. Once we get to a certain size, I believe it decouples, and then it doesn't follow it like that anymore.
And this should be the easiest one. What's the argument for Bitcoin over bonds?
Yeah, well, bonds don't give you a real rate of return over the long time. You know that. We've discussed it half the show. And Bitcoin is just the ultimate store of value. If you want to store your money in something and know that it's there, and if the money supply expands, there will be more dollars chasing it. And that means that, or whatever currency you're in, and the dollar is the best one, that that over the long period of time that it'll appreciate, meaning that whatever currency that you're valuing it in will debase against it, will depreciate against it, and you'll get more of those to use in exchange for whatever you want to do in life.
Great answers. All right, where I want to end this is we always talk about the debt spiral together.
Mm-hmm.
Can we grow our way out of it? Because a lot of the focus has been on the debt. But what about the growth side? Can we actually grow our way out of it? I personally think Bitcoin could help us.
Mm-hmm.
But there are all these new technologies. There's AI, new policies in place. Do you think we could actually grow our way out of the debt?
Well, you're talking about real growth, right?
Mm-hmm.
Because the technologies you're talking about are deflationary. Like AI is deflationary. I don't have to hire an assistant to do my newsletter,
Mm-hmm.
because I can use the different AI language learning models to help research for me. There are all kinds of applications that are coming from it that I don't believe they're replacing people as quickly as people are worried about, but it's definitely on that path to replacing certain functions and consolidating it. So that means that there's that in and of itself is a definition of a deflationary effect, right? So that's one thing that is very difficult to get your head around, is like, as technology expands and it enables us to do more with less, that's a deflationary thing. And this is where exactly what the central bankers have had to battle against all these years. And they continue to. They have to expand the money supply, and they
At
have
a
to,
faster rate.
at a faster rate than this is being debased. And so can we grow in real terms? I think that the central bank has already set the stage where it's very difficult, but there is a narrow path that you just said. There's a narrow path that we can turn around. If the US government bought Bitcoin, put it on the balance sheet and held it for a long period of time, that Bitcoin would end up stabilizing that underlying, that base asset. And so then you would have that against your debt. You could use to pay it down. You could, you could just use it as it would be pegged to it or something, whatever you need to do that, but it would stabilize it. And so you wouldn't have to be debasing the dollar like you are anymore. And that's the important part. I don't think that I don't think that in the next 10 years, Bitcoin's going to replace the US dollar, but it can enhance it. And that's kind of the path. It's a narrow path to get there, but it is there.
We can have a strong asset as opposed to all these liabilities.
Exactly.
Well, James, it's always so great to have you, especially in person. I remember when we were at a Christmas party in 2021, James had only a couple thousand followers, and look at you now, one of the most popular newsletters. So many guests. You're one of my most popular guests too. So James, it's always great to have you. Thanks for joining me.
Well, it's always good to be here, Natalie. I look forward to the next time.
His work linked in the show notes. Thanks so much.
Thank you.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. It really helps the show grow organically with new listeners. We have a free weekly newsletter. You can sign up at thenewsblock.substack.com. And remember, this show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.